Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me, Sonia Shenoy. Good morning. Things are looking good, right? For our markets, we're up close to about 0.5%. The positive handover from U.S. markets helps, and the fact that crude prices have seen a seminal decline. So crude prices are now at $85 per barrel. So the Nifty is now advanced for the third consecutive session. And today is, of course, the November series expiry. But the positive is that the December futures, the Nifty December futures, are actually suggesting a big premium of close to about 140 points. Does that indicate that this buoyancy in the markets is likely to extend? The markets are preparing themselves for a good up move next in the December series. Remains to be seen. If it happens, I guess we'll call it a Santa Claus rally. But just talking about the November series, it's been pretty good for our markets. The Nifty is up 3.5%. The banks are up 4%, while the Nifty PSU banks, that's where all the meat was in the up move. The Nifty PSU banking index was up close to about 17%. And for this week, while we've been consolidating, and there is a bit of a positive bias, there are many individual stocks which have seen big moves on either side. So that's, some of the stocks which have seen some big moves outside of the index this week. So on the gainer side, Easy Trip, 50% up. UCO Bank, in the lot of PSU banks, has rallied close to about 30%. But on the losing side, it's these new age listings, the large block deals have weighed on Paytm as well as Nykaa this week.
Oh, absolutely. And what a great move for the market, right? I mean, it's like it needed that one trigger. And I guess the writing was on the wall with the US Fed saying that perhaps they're going easy on rate hikes. The market just latched onto that and sort of built onto their gains. And to add to that, the fall in crude is also something that perhaps the street has taken with both hands. So the recipe was intact for the market to build onto its gains. Now, the important bit is whether it lasts for the rest of the day, because you have expiry coming up. The US markets are shut later today. So let's see. But for now, there is no volatility. It's the uptrend is intact. We build on to our gains. And the second half of the trading session, of course, could get a bit volatile. Remember, FIs continue to sell. I mean, FIs have sold almost 4,000 crores in the last 4 trading sessions. So that's something that you need to keep on your radar. But there are plenty of stocks in focus this morning. So let's get straight down to that. Tata Consumer Products is a top Nifty gainer. The Bisleri management today said that the company is in talks with the Tata Group to sell part of their stake. Mangalam is joining in to give us all the details. Mangalam, it was a very exciting morning, speaking to the Bisleri management, trying to understand what's happening there. But these are, if it happens, if and when the deal happens, these are two iconic brands sort of coming together.
A marriage of icons, if that happens, like you said, two brands that evoke maximum trust in India, Tata's and Bisleri, they will come together were that to happen. But as far as the numbers that we have so far, the numbers that have been reported, it is likely to be a deal worth nearly 6,000 to 7,000 odd crore rupees. We had the management of Bisleri confirm that their revenues are close to around 2,500 odd crores and 220 crores is their profitability. Now, Tata Consumer, the first half, they've run revenues of close to around 6,700 crores with close to around 670 crores of profits. So if you double that, it could be an annual revenue and EPS accretion by about 15 to 16%. What does this mean for Tata's in terms of the money that they're paying? Their market cap is close to around 71,000 crores. They have cash of over 2,000 crore rupees. So the dilution in any case is not likely to be more than 8 to 10 odd %, which means that for 8 to 10% of your dilution, you are getting 15-16% EPS accretion. That is the big play. And this does not account for the big benefits that would come by cost synergies as well as cross-selling of Tata's water brands to Bisleri itself. As far as the packaged drinking water industry is concerned, it's a 20,000 crore category, of which 60% is unorganized. So, the shift to organized is one big trigger. Premium and value-added segments are doing extremely well. So with Tata's actually going ahead and acquiring Bisleri, if the deal were to happen, it gives them volume, it gives them 30% share of the organized market. And Himalayan, which Tata already operates, give them value. And Tata Water Plus, which does copper, etc., gives them value add. So they have the entire portfolio, so to say, of packaged drinking water. But, keep the numbers and the brand strategy aside, just look back and look at it as consumers. Tata's and Bisleri coming together would definitely be an iconic moment.
No, absolutely. Very strong brands, business, as well as growth outlook. And the way this 2,500 crore of Bisleri revenues is derived is, as Mangalam said, the entire market is about 20,000. Of that, the organized portion is about 40,000, and in that, Bisleri has closed about a 32% stake. So that's how the number of 25,000 crore of annual revenues comes. But earlier today, we had a chat with the chairman of Bisleri, the iconic, legendary Ramesh Chauhan. Listen in to what he had to say and the kind of negotiations he's having with the Tata Group.
Just trying to understand at what stage of discussions are you right now with the Tatas?
We are in discussion.
Does that mean that if a deal has to happen, it will be with the Tatas only, or are there other players in the fray too?
Others are there,
Mm-hmm.
but it's not discussion yet.
2500 करोड़ के आसपास है बिस्लेरी की रेवेन्यू साल की?
कितना?
2500
2500 करोड़.
500 crore.
2500 करोड़, sir.
Ah,
All right.
2500 crores. Net profit number approximately 220 crores, 220 crore.
approximately, yes.
Okay, that's a man who has built an iconic brand and is finally letting it go. It's a big moment as well, right? I mean, in the industry, a brand that he has created. And of course, I mean, age is not on his side, so maybe he would want to sort of let go of that.
Age.
82 years old, and lending it to a company or an industry or a brand, the Tatas, who will of course take it, will ensure that the legacy continues.
Right? The brand
Absolutely.
value remains intact, and of course, as you said, his legacy continues. But let's move on.
Yes, in fact, Fino Payments Bank is surging in trade. Now, we had a chance to speak to the management there as well. Capri Global Holdings bought shares of the company. Vivek is here with details and the key management takeaways. Vivek, it was a bit confusing. The management sort of didn't want to put their finger down on whether there's a strategic deal happening here or not. But you tell us, what did you make of the announcements?
Well, absolutely right. So it seems to be a straightforward investment rather than a strategic partnership is what we actually understood. And what the management of Fino Payments Bank actually told us was that they are open to partnership with other banks as well. So that is one of the key takeaways. And when you're talking about the actual deal size itself, it's just over 1%, little 1.3%, was what they actually picked up the stake. But interestingly, if you're looking at the price action today, yesterday the stock was at the upper circuit, and yesterday Capri Global bought around 13 lakh shares, and this was closer to the upper end of the upper circuit limit in yesterday's trading session, and today there's been significant follow-up buying. So clearly the market considers this to be a very strategic, this particular acquisition to be of a strategic nature. But looking at the key takeaways, what Fino Payments Bank told us, they keep looking for partnership. At this point of time, there is nothing specific. However, they did say that there are quite a few synergy benefits that they see from this particular acquisition, or with continuing talks as far as Capri Global is concerned. So that's the key takeaway. And what they are saying is that at this point of time, no competition with Capri Global. So that is one of the other key takeaways as far as this particular block deal was concerned in yesterday's trading session.
Vivek, thank you very much for that. Let's talk about Interglobe Aviation. The stock is higher in trade today. Sonia, yesterday or day before, we had that domestic air traffic numbers for the prior month. Today, there is a brokerage note as well, the key developments.
So, there are two bullish views in the last 2 days, and I just wanted to put them on board. Credit Suisse and IIFL are both bullish on Interglobe Aviation, and this is the reason. There's a huge pickup in domestic air travel, and that will, of course, bode well for the market leader like Interglobe Aviation. Now, here's what Credit Suisse says. They have an outperform call. They have a target price of 23.50, which is a big upside to the current market price. They say that there is strong demand and limited capacity. The costs have been lower as well, and that can drive profitability going forward. Also, competition remains quite weak, particularly all the issues that are happening with SpiceJet. GoAir as well has been on the back foot, and hence Interglobe Aviation will benefit from that. Credit Suisse stays outperform, and they say that Interglobe Aviation has the strongest positioning in a sector with a very large opportunity. IIFL is the other one. They put out a note yesterday, and we covered this in late trade. They have a buy with a target price of 24.20. They say domestic air traffic has seen a sharp pickup. Volumes have now almost hit pre-COVID levels at 400,000 passengers a day. Not just that, ATF prices, aviation turbine fuel prices, have come down quite a bit from an average of 130 in Q2. They've come down to about 122 in Q3, so it will definitely reflect in their earnings. The outlook for the business is strong. The industry has seen a steep jump in yields as well. Yields, I remember earlier used to be around 4 rupees per RPKM, and now they have risen to more than 5 rupees. So everything is working out for Interglobe Aviation, and hence the stock is pricing that in as well. Let's take a quick break from tracking these buzzing stocks, but don't go anywhere. We'll come back with all the buzz in the commodity arena with Manisha Gupta. Well, it's almost a century on the Nifty now, so just about 3-4 points short of that. Very, very good move in the market, and a lot of stocks are buzzing around. Easy Trip is up almost 7% right now. Star Health, Apollo Hospitals, BKG. The list is quite long, actually. So let's take a breather from tracking equities and get some handle on what's happening in the commodity market. We're talking about cotton and sugar today. Manisha is with us. Manisha, over to you.
Thank you for that, Sonia. I'll start with cotton because the prices here have continued to decline. The demand is just dismissive, you know. If you look at the global prices for cotton, we're trading at a 22-month lows there. And that is the chart that tells you on how the prices really have moved in this year. We've seen a high of $158 per pound and then a low of 71, which was in the month of November itself a couple of weeks ago. And currently, we're just about holding at around those $84 per pound mark. In the Indian markets as well, the decline has been quite sharp. For 1 lakh rupees per candy to around 65,000 rupees per candy is how we are trading. But even with those kind of prices, we are still 10% higher than the international cotton prices. So even as we have seen 35% of a decline from highs of this year, we still are on the positive side there. If you look at the domestic markets, we have seen the mills come back now. With those kind of high cotton prices, the capacity cut down was very sharp, whether it was about South Indian cotton mills or Gujarat for that matter. But the cotton demand now seems to be coming back here. The Indian cotton export estimate in the meanwhile has been lower because of because we are at a premium here. So last year was 43 lakh bales. This time around, the expectation is that we wouldn't cross 25 to 30 lakh bales as well. There is weak buying, 1 from China and 2 from Bangladesh as well. Also, when you look at the USDA report for 2022-23, they're expecting a higher production by 2% this time. The consumption in the meanwhile is not expected to gain up as strongly. So the markets do believe that there could be some pressure continuing in case of the cotton prices for the next couple of months as well. Well, that's about cotton, but yes, a lot of movement happening in case of the sugar prices there. For the international markets, there is some support that has continued. So the sugar prices in the international markets holding very close to those 7-month highs there. For the Indian markets, it is about the crop availability. The crushing is just about started. And while India has been allowed to export around 6 million tons already, the government is expected to review this. And by the end of Jan or in Feb, there is an expectation that Indian mills will be allowed to export another 2 to 3 million tons. Because India is looking at a 9 million ton of a surplus. 6 million tons needs to be kept as a buffer. So there can be 2 to 3 million tons more allowed. The other big story for sugar clearly comes in from the wedding and the festive seasons. The industry tells us that the kind of sugar demand that they are seeing because of the wedding season is nearly 10 to 15% higher than the previous wedding season. So whatever quota mill is being allowed on a monthly basis is quickly getting consumed. And that's another reason that you are seeing the support come in for the sector.
Okay, stay on, Manisha. Sugar stocks are also surging in trade. Okay, thank you very much, Manisha, for that. That's about sugar stocks. We'll slip into a very short break. We'll come back and discuss market technicals. Himanshu Gupta of Globe Capital will join in next.
झाके रे झाके झरोखे से झाके हैरत से आंखें अपनी सी दुनिया नई रंगी लागे ख्यालों की खिड़की से मन कूदे भागे झाके रे झाके झरोखे से झाके दंग है छोटे बड़े सारे झाके रे झाके चल कोई ताके तरक्की को टुक टुक हर कोई ताके झाके रे झाके झरोखे से झाके
Reimagineering brighter futures with smarter steels. ArcelorMittal Nippon Steel India. Smarter steels, brighter futures.
सुन, इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस। सुन, डेट में है लो रिस्क, बात मेरी मान।
अरे बेटा सुन, गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन, अब तू कंफ्यूज मत कर यार। अरे मतलब सुन सबकी कर मल्टी।
मतलब मल्टी एसेट एलोकेशन फंड्स, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यान पूर्वक पढ़ें।
पुत्रवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी। वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, दिखे टकाटक।
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
Dadu,
Yes?
what does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC हर पल आपके साथ।
Play it your way. Play it your way, your way.
Sarah, this is your space.
Play it your way.
With the versatile range of sanitary ware, faucets and tiles by Sarah.
अरे भाभी जी बड़े दिन बाद
मुझे बेस्ट डायमंड ज्वेलरी दिखाओ।
ये एक्सचेंज करा लूं?
बेटा एक्सचेंज में ज्यादा
नहीं, सिर्फ 5% कटेगा।
वाह!
पेश है 95% एक्सचेंज वैल्यू और 90% बाय बैक भी। किसना डायमंड ज्वेलरी।
Welcome back. The Nifty today got to levels of about 18,350 thereabout at about 10:15 in the morning. We had a gap up opening. We built on it. But in the last 1 hour, markets have held absolutely steady around that 18,350. This is seen as a very important resistance for our markets. We're not giving up our gains from these levels, but we've not managed to decisively conquer some ground above these levels. So just hovering with a gain of close to about 0.5%. Remember, today is the November expiry and we're not going to get any global cues tomorrow as the US markets are shut on account of Thanksgiving. But one of the other big stories that we're tracking today are the two big food delivery companies, Zomato and Swiggy. Jeffries has written a very interesting note. Mangalam is here, who's going to tell us more about the key trends that Jeffries has highlighted for these companies. Mangalam?
Well, Jeffries has drawn upon Process, which is an investment group's latest release, to find out how the market share is stacking up between both Swiggy and Zomato, and formed its conclusions about the food delivery space so far. And they've said that the latest release does indicate that there has been a bit of a market share loss for Swiggy. Zomato's market share now stands at 55% at the halfway mark of 2022, which means that Swiggy is at 45%, presuming that both of them account for majority of the market right now. The revenue growth in H1 CY22, which is the first half of this year, for Swiggy has been 40%, for Zomato has been 55% plus. So on a revenue standpoint as well, for food delivery business, Zomato has inched higher. That's not all. In fact, Swiggy's losses have been way wider than Zomato at nearly $315 million, as against Zomato, which is sub $50 million. So as a result of which, and going forward, Jeffries, for now, while it sees modest growth prospects in the coming months for the food delivery sector, it ties in with the way Swiggy is performing and saying that, you know, there is a strong case for Swiggy to actually drop the aggressive stance that it has in food delivery. And were that to happen, it would mean better profitability for Zomato, which is the listed entity. In fact, Zomato as a stock too has recovered about 50% from its 52-week lows. And importantly, the food delivery business of the company turned EBITDA positive in the second quarter. The company's unit economics are getting better in the food delivery business. So let's see where they go from here.
Okay, thanks a lot for that. Well, Himanshu Gupta, the Vice President Research at Globe Capital, joins us now for a quick technical check of the market. Himanshu, hi, good morning. It's a 100-point rally that we're seeing on the index. Do you think we can build on to these gains for the rest of the day? Would you advise taking fresh long positions here? Or do you think that it could get a bit volatile given that it's expiry and, you have the US market shut tomorrow?
Very good morning to you. Well, I think the way the markets have started trade today, the setup looks positive. So talking about Nifty first, I think 18,320, 18,330 was acting as a stiff resistance. In fact, 18,300 call writers were very dominant from last 2 days. But today, as we speak, comfortably we are holding above those levels, and we have also seen some kind of put writing activity at 18,300, 18,350 odd levels. So I think the risk reward of going long intraday remains positive, remains favorable for bulls. And I think around 18,340 or 18,350 zone, one can initiate long positions, keep a stop loss below 18,300. On the upside, I think 18,400, 18,420 would be the next level to watch out for. Not only from today's perspective, because there is a stiff call writing visible at 18,400, but if we were to close above 18,400, then going forward, the outperformance may come from Nifty, which has been a clear missing strength as far as this breakout is concerned on both the indices. So I think 18,400, 420 is something I'll be watching out for today. A close above that will be the first confirmation that the markets are going to hit new all-time highs. Talking about Nifty Bank, 42,950, 43,000 can act as a consolidation. We have already seen an outperformance and the leadership coming from Nifty Bank. Data remains positive and the short-term targets are 43,500 odd levels. But for today, I think 42,800, 850 makes a good entry, keeping a stop loss below 42,700, and on the upside, 43,100, 43,200 can be seen here as well.
Okay, so you're maintaining a bullish bias, but for a confirmation of a big up move, you would wait for levels of 18,400 being crossed on the Nifty. What about individual stocks, Himanshu?
Yeah. So one good thing about markets today is the breadth is supportive, it's positive, and a lot of mid-cap cash segment stocks are giving very good breakouts on charts. So railway stocks have been on very good move over past few days. So there is one stock from this segment. This is RIL. The stock has given a very strong breakout from a symmetrical triangle today. This can be bought around current levels of 58, keeping a stop loss below 55. Short-term targets of 65 can be seen in RIL. Second one, fertilizers and chemical stocks also looking very strong. Yesterday we saw very good breakouts across the segment. RCF, Rashtriya Chemical Fertilizer. This is also one stock that has actually confirmed its uptrend. So this is one stock again can be bought in today's dip around 115 odd levels. Keep a stop loss below 111 and short-term targets of 125, 128 can be seen in RCF. And from an F&O, I think cement and IT would be the space to watch out for, because if that big breakout has to happen, these two sectors have to participate. So from cement, I think Ultratech Cement is one stock that is actually poised fairly for a big breakout. It can be bought with a stop loss below 6,800, targeting 7,000 and 7,100 in the immediate short term.
All right, thanks a lot for that. Well, Himanshu, have a great day. That's the word coming in from Globe Capital. But let's move on to the new kid on the block. Keystone Realtors, popularly known as Rustomjee, listed at a 2.6% premium to its issue price this morning. Vahishta joins in now to give us all the details. We had a chat with the management as well. Vahishta is here to give us the latest. Vahishta.
Hi Sonia. Keystone Realtors has had a relatively muted listing on the exchanges today. As you mentioned, listed at a premium of 2.6%, which comes to 555 rupees per share versus the issue price, which was 541 rupees per share. Now, the total subscription was 1.1 times, which includes retail of 0.35 times, qualified institutional buyers of 1.88 times. The issue size is up to 635 crores, of which the offer for sale was 75 crores. Now, the IPO proceeds are expected to be utilized for reduction in their debt, funding the acquisition of future real estate projects and some other general corporate expenses. Now, while we try to compare with the peers, Godrej Properties has a market cap to sales of 17 times, while DLF 16.6 times and Keystone Realtors at 4.5. We hosted the management on our channel today earlier morning, and they said that they are looking at 35% as their gross margins. Pre-sales is expected to be strong. They haven't quantified a number, but when we compare with FY22, pre-sales were at 2,600 crores. Mumbai will continue to be their mainstay market, and the company wants to maintain 1:1 as their debt equity ratio. Back to you.
Vaishya, thank you very much for those details. Get into break. Up next, we'll discuss market fundamentals. Varun Goel, head of equity at Nippon India AIF, joins in next.
Welcome back to Trading Hour on CNBC-TV18. As promised, we have Varun Goel, the head equity at Nippon India AIF, who joins in now to discuss the market fundamentals and the road ahead for the markets. Varun, pleasure speaking with you. Thanks for joining in. It has been a very smooth ride so far, and as we head into the end of the year, how are you feeling about the markets now? You think we could build on to our gains now that most of the headwinds seem to be receding? And for an investor, what is the recommendation?
Good morning, Sonia. Thanks for having me on the show. I think broadly from a market's point of view, we are looking at somewhere between 800 to 850 rupees earnings for Nifty companies for this year, and for next year we are looking at somewhere between 900 to 950. That's on Nifty, and so on that basis we are trading almost 19-20 times 1 year forward earnings. Of course, market will start looking at the year ahead. I think this was a tough year with a lot of issues in terms of monetary tightening, commodity price increases, and all. Thankfully, crude oil has cooled off to $85 a barrel, which is always good news for India. So we think incrementally things are getting positive as far as Indian economy and markets are concerned. Our sense is earnings growth could be 10 to 15% on a CAGR basis, and this is a good time to do bottom-up stock picking. Although valuations are a little higher than the 10-year average, but I think on a stocks specific basis, there are several sectors like telecom, like real estate, banking, and financial services, which should see strong earnings traction. So it should ideally be a stock pickers market from here onwards.
So banking, telecom, and real estate. I remember last time, Varun, you'd also said that IT was one of your top sectoral bets because you believed the margin concerns have receded and the valuations are now attractive after the recent fall. Have you been buying IT stocks in the last, say, 1 month?
Yeah, good morning, Rima. So definitely, I think earnings in IT space have largely held on. Our sense is this year, Tier 1 IT companies should see between 10 to 13% top line growth. The next year, FY24, is something which is more difficult to call, considering the fact that no one is really sure how deep and how long the US recession is going to be. But our sense is a lot of that is already in the price. Mid and small cap companies in the IT space have corrected 30, 40, 50%. The large cap companies have corrected 20, 25%. So if one were to take a 3-year view, I think the digital transformation companies, transformation of the client companies should continue, and Indian IT companies are very strongly poised to capture that growth. So as such, I know we are definitely buyers in the large cap and the mid-tier IT names, and we believe that they can create significant value in the next few years.
Okay. We just had a chat a while back, about an hour back, with the management of Rustomji, the new listing, Keystone Realtors. And he made a very interesting point. He said that now what's happening is that the market has become so huge, the real estate market, and there's a massive shift from unorganized to organized, especially after COVID. Do you think that, I agree that a lot of it perhaps is in the price as well, but do you think from a structural standpoint there's more to go for these large real estate players?
Sonia, I think affordability has seen significant improvement. In 2013, your EMI to take-home salary ratio had gone up to almost 50%, which means you were paying half of your salary in EMIs. Today, despite the home loan interest rate going up, that ratio is still 35%, which is, I think, very, very affordable. If you look at the pan-India inventory levels for real estate companies, they are less than 2 years. Now, that is always good news as far as the pricing action is concerned. We believe in the next few years, we will see more and more market share gains for top pan-India real estate companies. We will see more pricing action. So while volume growth are anyway strong, we should see price action also happening, which should lead to a good 15-20% compounding for a lot of these large cap and mid cap organized players. And as such, we remain quite positive on this space.
Varun, specifically about Mumbai real estate, it's no longer affordable, right? It was during the peak of COVID 2 years back, but rents, purchase prices have shot up significantly, and now it's much higher than what it was pre-COVID levels. So what about Mumbai real estate? Because rentals, as I said, have gone up. At some point, the higher interest rates are going to hurt. And even the availability, the supply in the market is dwindling. So are you as confident about Mumbai real estate, clocking in good gains from here?
So Rima, I think we've seen a period of 8-9 years when there was no pricing action. So between 2013 and 2021-22, there is almost flattish kind of pricing. In the meanwhile, salaries have increased significantly. So while I agree with you, we saw the bottom of real estate prices in the first quarter of COVID, but since then prices have been going up. At the same time, incomes have also been going up, and cumulative income increase of 7-8 years. 9 years is definitely going to help. As I said, affordability is still good. If we look at the EMI and take-home salary ratio, that's still healthy at 35%. If that goes up above 40, that will be something which we'll be worried about. And I think looking at where crude oil price and inflation is, we might be close to the end of this tightening cycle, maybe another 25 to 50 basis points, but that should be it. Pre-COVID, pre-demon, we saw 9% home loan rates. Now we are getting back closer to that, and we believe that should be the peak home loan rates for this cycle. So as such, we are not too worried. Yes, if the global situation deteriorates in a meaningful manner, which means there is significant dent on IT sector and broadly broad Indian growth, then I guess we might revisit that hypothesis. But as of now, our view remains the same, which is a positive view on the residential real estate space.
Okay. I do want your thoughts on what's happening with some of these names like, Star Health, the PB Fintech. There is news flow that the specific caps on commissions to agents and intermediaries has been removed. So this reduces the regulatory risk on the commission rates for many of these companies. And we've seen a large move over there. Does it make sense from a long-term standpoint to buy into these names?
Well, I think the recent policy recommendations that have been coming from the regulator are quite positive. I think they will definitely help most players in the space, especially the general insurance and the health insurance companies. So overall, we would be positive on the space. I think the biggest issue with general insurance companies in the last 2 years was, of course, there was a lot of claims due to COVID, and second, the auto sector had slowed down, which remains a very large space for most general insurance companies. Now, as the auto sector picks up, we would expect the growth should come back, and the combined ratios which were running at elevated levels should also cool off. So we will continue to monitor the monthly numbers and see how things go from this point onwards.
What's the thesis for the bullish call on telecom? Because stocks like Bharti Airtel are already at 52-week highs, or nearly there.
Yeah, so I think the biggest story in telecom is how the ARPUs are increasing, the average revenue per subscriber. Now, just 1 year back, the industry ARPUs were at around 140, 145 revenue per subscriber. Today, we are at already 180 plus kind of levels. And of course, some of the companies have announced that they want to take the ARPUs to as high as 300 rupees. Our sense is, 240, 250 is something which is very likely in the next 1.5 to 2 years. So as such, as the ARPUs increase, there will be a significant increase in profitability. We haven't seen very, intense competitive intensity as far as the 5G auctions are concerned. So the capex there should stay under control. So overall, for the next 2 years, one of the fastest and the largest growth in Nifty companies' profits, I guess, will come from the telecom space, and we continue to be positive on that.
ARPUs at 240 in the next 2.5 years versus current levels of 180.
Sorry, what was that?
No, you said your expectation is that ARPUs will rise to 240 rupees in the next 2.5 years? Okay.
Yes, maybe sooner than that. Yes.
Maybe sooner than that. All right. Thank you very much, Varun, for joining in. That's Nippon India AIF, bullish in banking. He's bullish in real estate. He's bullish in IT and telecom. Slip into a break on the other side. As we do that, here is a quick programming note. To fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead a charge with one-of-a-kind mega initiative, Future Female Forward, the Women's Collective, presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, 25th of November, in the presence of Shireen Bhan, Managing Editor, CNBC-TV18, Mr. Hitendra Dave of HSBC, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from business, entrepreneurship, entertainment spaces. Don't forget to tune in to CNBC-TV18 on Friday, 25th November, 5:30 p.m. onwards. Welcome back. One of the big movers today is Policy Bazaar or PB Fintech. Currently, as we speak, it's up more than 10%. Earlier today, there was also a very large block deal, 1.6% equity changed hand, totally valued at close to about 300 crore rupees. So that's one update. But separately, the regulator IRDAI has also released a revised consultation paper on expenses of management. Surbhi is here to explain the details and the contours of this regulation. Surbhi.
PB Fintech is buzzing in today's trading sessions with huge volumes. This is because 1.6% equity changed hands earlier today. More importantly, IRDAI has released a revised consultation paper on expense of management and commissions. According to this, the regulator has done away with the specific cap on the commissions to agents and intermediaries that it had earlier proposed in August. Instead, it has suggested that the commissions paid by the insurance companies, both life and non-life, should not exceed the expense of management. Proposed expense of management limit is 30% of gross premiums for life insurance companies and 35% of gross premiums for standalone health insurance companies. This may come into force in April 2023. This is a big positive for PB Fintech as it substantially reduces the regulatory risk for commission rates.
Okay, thanks for that. Well, Apollo Hospitals are also in focus on the back of bullish brokerage commentary. Credit Suisse, in fact, has an outperform call on the stock. Ekta is here with the details. Ekta.
Thanks for that. Well, yes, definitely Credit Suisse is positive on Apollo Hospitals. They have an outperform call with a target price of 5,100 rupees. According to them, Apollo 24/7, which is basically the digital arm, is scaling up to a leadership position in the digital health space. The company is targeting to expand both the user base as well as annual medicine volumes by 5x. So user base to 100 million, annual medicine order to 50 million. It is also supported by a physical network as well. Now, according to them, the upside from the Amazon partnership would probably reflect FY24 onwards, and the discounting pressure has eased as private health platforms are facing funding constraints. Earlier this week, UBS had also turned positive on Apollo. They upgraded the stock to buy with a target price of 5,600 rupees. Remember, UBS had at one point downgraded Apollo Hospitals in April to neutral from buy, but now they've turned positive. So they think that they are executing well on new initiatives. They've come a long way in terms of ramping up their digital presence. Apollo 24/7 is again leading in both monthly active users as well as app downloads. The market is not pricing in any early digital strategy success. The core hospital business is recording strong traction as well.
Thank you very much, Ekta, for that. Up 3.5% today, up 8.5% for this week. This one right now is the biggest weekly gainer. Get into a break. On the other side, we'll get you more on the market. Stay tuned.
Welcome back to Trading Hour on CNBC TV18. Well, top industry leaders say that private investment is picking up. Now, speaking at the 9th banking conclave of the SBI, Chairman Dinesh Khara said that 20 lakh crore rupees was invested last year and 12 lakh crore rupees has been invested so far this year. That's not all. Khara said that banks are sitting on excess liquidity worth nearly 3 lakh crore rupees to meet demand. We spoke to the L&T and JSW Steel top brass. They remain upbeat on growth as well. Here's a slice of that conversation.
We are already seeing a fairly good pipeline of the proposals. It is, I can probably share the number with all of you here. It is as strong as about 2.5 trillion with State Bank of India itself. And also, let me share with you, last year we had seen almost about the proposals, in fact, the fresh investment coming in about 20 trillion. This year it is already about 12 trillion. So that is a very clear reflection that people have faith in the demand in the economy. I think that is something which is most important. And I would say that if at all there is a demand in the economy, perhaps the corporates are willing to invest, corporates are willing to come with the infrastructure and also the capacity creation too. And the second important component is the capacity utilization has improved to about 75%.
The government's thrust on infrastructure, building and investment is music to our ears. As a representative of a company which thrives on infrastructure building out, we think that we are in for a period where investment in the core infrastructure, be it transportation, healthcare, be it in terms of public spaces, utilities, water, power. I think India is so underserviced as an economy, and it is at the other end of its aspiration that unless we provide a bridge between the aspiration and the enablers, India is not going to get its targets right. And I think the government does realize. So consequently, I think a lot of focus was getting the act together, getting the house in order. I think now that largely that has been achieved, maybe the minister, finance minister, could possibly see demonstration of the optimism coming through in plans.
So to answer your second question, PLI, production linked incentive for specialty steel, it is not creating a basic steel capacity. So whatever imports we are doing of specialty steel, like electrical steel, which we are importing 100% into India. Similarly, something related to API grade steel or automotive steel, where we are importing, PLI scheme is getting extended only to the specialty steel. That means basic steel making already exists in India. Right. We need to go into high-end value-added steel. For that, PLI scheme is introduced. 79 applications have gone itself is showing that there is a lot of interest in setting up those capacities in India to stop the imports and also to enable Indian steel industry to export, as far as that particular point is concerned. Second one, you...
On the concessional tax rate being extended by another 5 years.
So in fact, this concession of 15% was given in the year 2019. Yeah. And they said by 2023, whatever investments that are made, those investments should be completed and it should be commissioned. Whereas at the request of the industry, it has been extended by 1 more year.
Correct.
But because of this offshoring and also China plus one policy, if it is extended, it will be great. It is welcome step.
My assessment is that almost about 2.5 trillion to 3 trillion is a balance of the government with the banks, RBI. So that remains unspent. During the month of November, we did see some kind of a spending happening from the government, and it did dish out some of the liquidity constraints. Going forward, I think the banks have got the excess SLR, and that excess SLR will be utilized for ensuring that there is no liquidity challenge for meeting out the growth needs of the economy.
Okay, that's some important voices from India's banking arena. Talking about our own markets, BKG is having a very good day. The stock is up, locked in an upper circuit of about 10%. Listed last week, the issue price was 300 rupees. But from that issue price, this stock has seen a rally of close to about 27%. Inox Green listed yesterday, very subdued listing. But today the stock is coming in for some amount of buying. But it's still trading lower than its issue price of 65. Yesterday, when we chatted with the management, they indicated that with the money that they've raised from the IPO plus the SPV sales that they're planning, the company will eventually become net debt-free, perhaps in 1 year's time, versus the current debt of more than about 750 crore. And finally, Glenmark is seeing some selling pressure. This is after the US FDA inspected or issued a warning letter for the company's Goa plant. So Glenmark Pharma has now slipped to the low point of the day. With that, it's a wrap on Trading Hour from the entire team. Thank you for watching. Stay tuned. Halftime Report is up next.